Yeah, we really have a powerful goal. We really want to be a national player. We start off as just, being in Atlanta, and then we became sort of a region, then we became sort of semi-national, and now our goal is to really have national presence. We really want to have a charitable nonprofit component to what we're doing.
Welcome, everyone. On this episode, we have none other than Dr. Vikram Raya and Dr. Ravi Gupta, the co-founders of Viking Capital. When Vik and Ravi get in a room together, it's always a force to be reckoned with. So I am extremely excited for this episode, and we're just going to dive right into it. So Vik and Ravi, welcome.
Thanks, Nathan.
Awesome. Making money outside of your job is always a lot easier said than done, right? And people see the expansive, explosive growth that Viking has had, the hundreds of millions of dollars of assets under management, the real estate. But, it's like that famous picture of the iceberg where you have kind of the top 10%. That's really the triumphs and the successes, but you don't really see what's underneath the iceberg, right? The sleepless nights, the scares, the trials and tribulations. So today I want to take a deep dive in and below the iceberg. So can you tell me a little bit about the origin story of how Viking Capital got started?
Yeah, absolutely. So we had no clue that what we were creating. We just wanted to do something different. I was very happy practicing medicine. I was a cardiologist, really enjoyed it, but I was always looking for more. I always had this hunger to grow, to contribute, to do something bigger. Started a single family company for a while with my father in Atlanta, and we grew that to about 30 properties. But I came across this guy at one of my real estate investment clubs, and he talked about, you can buy 100 unit. I was like, oh my God. And then he used this scary word called syndications, and then really freaked me out. And then he said yeah, they'll pay you to buy the deal and you run the deal and then you get investors. And so it was exciting, intriguing, but it was also very complex and probably overwhelming. And so I put the idea in the back of my head, and it was not until I got to meet my buddy and partner in crime, Ravi Gupta, that I sort of told him about the idea, and it intrigued him as well.
Yeah. So I'll add on to that. So Vikram brought the idea of multifamily syndication to me. I didn't know what multifamily was. I didn't know what syndication was at the time. I had a little idea of what multifamily meant, but I didn't understand the scope that it was 100 plus apartments, because that sounded crazy to me. Because at the time I was purchasing 3-unit properties in Washington, D.C. with my wife. So we were buying small units, and we were, it's called house hacking now, but what we were doing at the time was basically repositioning those assets, living in one unit, renting the other 2, and then moving on and doing it with another unit, and so on and so forth. So we had 4 of those 3-unit properties in DC, and I was managing all of that. And it was extremely time consuming. And I knew I didn't want to do it long term. I was looking at a property management company, but it was tough finding one and finding a company that really understood what you wanted and did and managed the same way you wanted. So I felt like I had to be there on the ground. And when Vic brought this up, I was like, look, there's no way that it's possible to manage 100 units effectively, because I could barely manage 11, and I can't find the right property management company to do that. But that's when we really learned what, purchasing and managing a property, a multifamily property was, in that, you're managing the property management team on site, and there's economies of scale related to that. So when we figured all that out, we understood that, I felt comfortable with it.
Yeah. And what did your friends and family think? I mean, leaving a pretty successful medical career and kind of pushing all your chips into real estate, I can kind of imagine it must have been a little bit scary.
Yeah. Well, first of all, that's the wrong thing to do. So don't just quit your day job immediately and just jump into your side hustle. And so, a lot of times I coach and mentor folks, and what I say is, similarly to a medication, you want to wean off that medication and, do something else. You got to wean off your job. And so to titrate that out, you got to have proof of concept. So for all those people listening to this podcast, guys, you got to really figure out what is it that you really are good at, what you're passionate about, what you really want to contribute to the world, and what you can get paid for, And once you figure that out, and whatever you're doing, first, it doesn't matter if you're not that keen on it. optimize what you're doing first. So I figured out how to optimize my cardiology career, figured out how to make the most money, have the most impact, try to help create the team I wanted. And once I was sort of maxed out in that capacity, that's when I started learning other things. So started learning something like functional medicine, started learning real estate. And then I started going into that, creating an entity, getting teams, getting friends, getting people involved. But I didn't let go of the primary thing until I really started earning income from it. And then I felt comfortable, like, hey, I think we're getting good at this. Hey, this makes sense. Perhaps let's delve into it more. And then the buzzword is, once your side hustle makes more money than your main hustle, that's when then you have a serious question to ask yourself.
Yeah.
Yeah.
And as far as things for me, Nathan, I didn't quit medicine. Medicine, identify myself as a physician. I always feel the need to practice in some way. And that's the great thing about investing, right? You can diversify your interests. I didn't want to practice full time. I knew that, but part time was perfect. And that's what I did. I went PRN, practiced as I wanted to. Vic and I, we share a lot of the same interests. I feel like we're so aligned in a lot of ways, but then we look at things from different perspectives as well. So we're able to work very well together because of that. But I'm also interested in functional medicine. And I started a functional medicine practice, on top of what we're doing in Viking. So again, you don't have to stop what you're doing. You can if you want, and if it makes sense for you. But if you don't, then you can invest or you can start something like we did and really focus on your passion. Do the amount of work that you want to do. A lot of physicians, they don't want to quit right out. They want to maybe work 50% or 25%. You can do that. There's no problem.
Yeah, I love that optionality, right? You're trying two stories tell two different sides. You can either jump all in, or if you have, a lower risk tolerance and you kind of want to, as Vic said, kind of wean yourself off into the investments, there's that portion too. And I mean, to your point, Ravi, you don't have to completely give up medicine altogether, which is also great. Why do you guys? Yeah.
Before you get into the next question, I want to expand on the concept of identities. People think they have to relinquish an identity to embrace a new one. I wanted to tell them that the word "and" has to be involved. So it's really, you're a physician and an investor, and a father, entrepreneur, and it's really adding identities and having an expansive way of thinking versus either or kind of mentality. And a lot of people say you can't have it all, and I beg to disagree.
Yeah. Ravi just talked about that on the previous episode, where it's, the more diversity you have, the better, right? You're stacking on skill sets, you're stacking on new avenues of wealth, which is phenomenal. Why did you guys choose to start a multifamily syndication company like Viking that's, specifically tailored towards helping healthcare professionals and other high income earners achieve financial freedom? Because there's a ton of other asset classes that you guys could have gone into. Why did you specifically choose multifamily?
I'll let Ravi answer first.
Yeah. So it was something that we both understood. He, as Vic mentioned earlier, he was buying and flipping single family homes with his father prior to starting Viking. And I was doing the small scale 3-unit multifamily properties in DC. So we understood multifamily. I grew up with a family that invested in townhomes and single family homes. My father did a lot of that. So I understood that on a deeper level, and it seemed like it made sense in terms of that transition. So we both don't have that financial background. We don't understand kind of the nuances of the finance. We didn't understand the nuances of the finance world at that time, but we did understand what multifamily was and how we could make money in doing so. So to me, that was an easy transition, and it seemed like it was a safe transition because people need places to live. They need places to build their families and communities. And the other reason is because we can make change in people. Because as physicians, many of us go into medicine because we want to help those others that have whether it's disease or what have you, or help them in some way and gain gratification from that. And this is just another way of helping folks and build communities. So it really satisfied all those needs that we both had.
So yeah, I would say look, I got my butt kicked options trading. I tried, I started other businesses, medical businesses, which were fine, but I really thought real estate is a powerful vehicle. It's been one of the most powerful wealth creation vehicles for the last 5,000 years. But within real estate, you have your 31 flavors like Baskin Robbins. So what flavor do you want to do? Do you want to do, mobile home parks? Do you want to do car washes? Do you want to do medical office buildings? Do you want to do, retail strip malls? Like, what is it that interests you? And so of those things, it just made sense. Okay, we've done single family or smaller multifamily. How do you scale that up? And I always believe in what can you scale in a very powerful way. And so it's not like you need 10 times the amount of labor to go from 1 unit to 10 units, right? It's incremental, maybe 2x the labor, but maybe the returns are, 6, 7, 8, 9x. So that's what really excited me about it. And then next was really, what are the most successful people out there doing? And so when I read Rich Dad Poor Dad, Robert Kiyosaki book, he talked about apartments. When Sam Zell, who recently passed, as we're recording this in May 2023, he started his start in small multifamily as well. And so a lot of the titans out there, the people who own the REITs, even Blackstone, all the people that have really taken it to that next level, they started in multifamily. So that already gave us a clue. And so then it's like, all right, how do we wrap our heads around this and get it going? And then number two is I'm surrounded by a lot of people who have a decent amount of money, cash, income, but they don't know what to do with it. And so that prompted me to help them by us creating this company, because we needed a place to park our cash and grow our financial freedom. And so this was a perfect avenue for like our friends and family and our colleagues to do the same.
Yeah, it goes back to that conversation of and, not or, right? You can be in mobile home parks and industrial and office and multifamily. It's just a way to de-risk your investment portfolio while optimizing your returns. What makes Viking different than a lot of the other multifamily syndicators and operators out there?
I think, go ahead.
You go ahead, Vic. I'll go after you.
I think it's our take on things, right? We're coming from a non-traditional economic background or economics background, non-traditional real estate background. We're physicians first and foremost. And so what our priorities are and our value hierarchy is different. We're willing to sacrifice, income or profit if it helps the community, if it helps the tenants, if it helps our investors. And so like, in medicine, there's a common tenet called do no harm. And for us, it's lose no money, number one. And then also do good through real estate. And we've sort of made that one up as one of the underlying tenets of Viking Capital. And so because we're successful in our medical professions and we've done well with our investments, we don't need the money from Viking for our day-to-day living or our operations. And so we get to look at it from a little bit of a sort of not a distant view, but sort of a view where this is not like our bread and butter on our day-to-day living. And so we can make decisions based on the global good of everyone involved versus our personal good. And I think that's one of the unique aspects.
Yeah, I would 100% agree to that. We've transacted with many groups as we've purchased various multifamily assets over the years. And I can tell you that, and I'm not saying this to brag, I'm just telling you what I've seen is that no one operates the properties like we do. And it's because of the values that Vic just mentioned. Recently, we transacted on a property where the owner didn't really take care of the fire life safety stuff because they're trying to keep some of those profits. Other properties, there's deferred maintenance where people are suffering living in these units because the owner's trying to keep as much as they can and maximize their proceeds for themselves and their investors. And we've seen that time and time again. People really try to squeeze every dollar out of the property. Another owner that I'm thinking of literally will run a property to the ground and just extract as much cash as they can out of it. And, and was just riding off this organic appreciation train that we just finished up. And that's how they made money. And we just don't operate that way. It's just not in our ethos. We don't believe in it. We don't subscribe to it. And it's because I feel like a lot of it is because we come from that different background, as Vic says. And then I'll add one more thing. I remember rounding in the hospital and I was talking to a friend who's an investor of ours, and he was like, "Hey man, I got 50,000 for you for the next deal." And I was like, "Okay, well let's sit down at lunch and I'll tell you about it." And he was like, "No, I trust you. Just put it in whatever, whatever you have." And he's like, I don't need to talk about it. And that's the kind of trust that, and I was like, wait, I was a little uncomfortable. I'm like, "Hey man, I want you to make sure that you like this." He's like, "No, I trust you." And those are the type of people that we know, people that just trust us and who we are. And whoever's looking for a sponsor to invest in, make sure you have that level of trust with them. Make sure you really know them and know what they're about, and are able to trust them with your money on that level.
Yeah, you don't. We prefer you not to look at our documents.
Right. Yes. Yes. Please don't, because we're not finance people. We don't know what we're writing up. Just
And you said this in the past that Viking has what we call the triple bottom line, right? People, planet, profit. And I love that we're putting people and the planet even before we see kind of the bottom line of the actual dollar. And something that I think really drew me to Viking was the core values. I think it's something that all of the Viking employees embody, if not exude, as well as our property management team as well. And so the 5 core values of Viking are that we're driven, we're humbly confident, we're resourceful, we have a constant and never-ending source of improvement, and we have a help-first mindset. But I'm curious how you guys actually came up with those core values. What was the process like? Did you eliminate some, or some that were just kind of sticking around? How did you actually come up with them?
I saw it on an Instagram post. No, I think me and Ravi try to live by these values. It's something that, we really believe in self-development. We really believe in learning. Both of us challenge each other to read a lot of books on Audible or, physical books. We go to conferences. I think growth is in our DNA, number one. Number two, I think collaborative versus competitive. Like there are people in the multifamily space that I reach out to and ask questions, even though I know we compete on the same deals. And that's the kind of relationship I like to foster. And it's, when we started off, we didn't have many resources. So by definition, we had to be resourceful. And I think based on how me and Ravi are and what we like, those are the people we want to surround ourselves with. So when we started hiring, we're like, who do we want to work with? Who do we want to grow this company with? And those are the people we've been blessed and grateful to have on our team. And, thankfully, people have been, like you and so many people in our company, they grow with us. And we like to be mentors. We like to stimulate growth. We like to create a vision. We like to unlock people's hidden potential. And similar to these properties, we like to find these diamonds in the rough and find the potential for these properties and let them, explode in value. And so I sort of see it all being sort of a symbiotic relationship here.
Vic, adding on to embodying the value add spirit, how has Viking really evolved over the course of since the inception?
We've learned a lot of lessons. I think we've been punched in the mouth quite a bit, and as any young entrepreneurial team can attest to, we've been wise about getting mentors, learning strategies, and figure out the best of the best in the industry and sort of modeling and emulating, best practices. But you always make your own errors and mistakes, and we've done those. But the cool thing is whatever errors we make are smaller errors, and we learn a lot from them. And whatever our successes they're sort of what we call asymmetric risk reward. And so that's pretty cool. Number two, I think we've built a system in place to where we're running it like a true company. Like it's truly like a multi 8-figure, 9-figure kind of company, because we run our meetings efficiently. We're always talking about innovation. We're using technology in the right way. We have a whole methodology and system of hiring that's pretty, top notch. And each one of these like innovations and successes has come from a challenge we had to face. And so that's how we keep growing as a company. And then we push the limits of what's possible. Our first deal was, I believe, a $4 million acquisition, right, Ravi? Yep. And our recent acquisition is a $100 million acquisition. So, I mean, it's amazing the scale of what we're accomplishing, but it just humbles us more than than makes us feel like we've accomplished it all. It's more like, oh my God, we still have so much to learn. And so I would call it, we always have a white belt mentality.
What's your vision really for where Viking's going to go in the future? Because I know that you've talked about the moonshot, which is kind of the audacious goal for Viking. What does that look like in 5-10 years time from now?
Yeah, we really have a powerful goal. We really want to be a national player. We start off as just, being in Atlanta, and then we became sort of a region, then we became sort of semi-national. And now our goal is to really have national presence. We really want to have a charitable nonprofit component to what we're doing. Ravi has initiated this. Is it One Tree Planted, Ravi?
Yes.
Yeah. So we're literally planting trees, all over the country on what we're doing. I have interest in things like, sustainable water projects all over the world. But on top of that, the communities that we're buying in, we really want to have a strong presence there. So that's sort of that charitable thought process. But in terms of our team, we really want to grow to have like regional managers in different parts of the country. Acquisitions wise, I think we can get to multi-billion dollars. And I think it's within our game plan and our trajectory. And we like to have a company that's going to be around for 100 years.
Yeah, absolutely. And Vic, I'm glad you brought up the charitable portion too, because what I loved is that, both Vic and Ravi, both of you guys, turned it almost on the team and said, hey, what would you guys as a Viking team like to invest in as well? What can we help support you that you really care about? Which is phenomenal. Absolutely phenomenal. Ravi, I know that you and Vic both, invest alongside investors, but then also have your investments in other sponsors deals as well. How have you become better investors and better leaders over the course of Viking?
Yeah, great question. As you mentioned, we always invest in our own deals because we strongly believe in our own deals. In fact, there are times when I want to invest more than I can in my own deals, but we have so much of a demand to invest that we have to even scale back ours. So, it is humbling to be in that position. It's also very gratifying knowing that we're offering something that a lot of people are interested in, but it also gives me the opportunity to invest in other sponsors' deals, and I see how they operate. I see how they manage their team and the types of deals they invest in. And it's been eye-opening. I've seen some sponsors operate in a very efficient, effective way, and it differs a bit from our style of operation in certain ways. And then others are not really that detail oriented. I've invested in funds where they will pay too much for certain assets, and deals that we don't think will make sense, they will buy. So it gives us a full breadth of what is out there and what other people are investing in. When you invest in other people's deals, you get just a different perspective in that way. So, to your question, how does it make you a better leader? Well, I think it makes you a better leader because you have more exposure. You understand what's happening in the markets. And there's sometimes when we see somebody's investing in certain deals, we're like, wait a minute, we didn't think that would work. How are they making it work? And we look at what they're doing, and we're like, well, we could potentially do that too. Maybe that's we didn't think of that tweak, or get this kind of debt. Maybe it's a different type of debt vehicle they're using. So that's where, to answer your question, that's where we can get that we can, build our knowledge base and improve our leadership.
Yeah. It's all about that constant and never ending improvement, right?
Yes, absolutely. Constantly learning, exploring, understanding what other people are doing, reading, listening to podcasts, attending meetings, talking to experts, talking to people that actually have been in 6, 7 different market cycles. I mean, we've had experiences. We've spoken with people that have been in that many market cycles, and they offer these like pearls of wisdom that you could read in books and maybe gloss over. But when you hear somebody like that saying it, like, just this is all you need to pay attention to is X or Y, then you're like, okay, well, that means a lot.
Here are some of the lessons I've learned in leadership, Nathan. I've learned that there's every stage of the business is almost like a child. There's the baby, there's the infant, there's a toddler, and young teenager, and then an adult. So it was really powerful to see Viking go through some of those stages. And I think we're like a hormonal teenager to almost a young adult at this point. But every stage has, every level has its own devils, and so you're like learning those things as you go through. I think that was very key. I think 2 is like really having a powerful business operating system has helped us really grow. 3 is perfecting hiring, and I don't think we've perfected it, but we're getting very close to it, like where we really figure out who we want in our company, why they need to be there, and sometimes hiring even for the future growth versus just our current growth. Similar to Kevin Costner, if you build it, they will come, kind of thing. And then going from, a lot of shiny objects. I mean, we looked at hemp farms, we looked at, car, and we looked at everything like assisted living, like, so many different asset classes, mobile home parks. I mean, also self-storage. But we realized that, at least for our DNA, for our company, what makes sense is really focusing on one asset class and becoming a master of that asset class. And so, the 10-year rule, 10,000 hours kind of thing. And for us, it's the 10,000 units. I don't think we're really going to divert until we hit our 10,000 doors and really focus on multifamily. And then after that, we can add other verticals. And, we are emulating to a point, like some of the leaders in the industry, but then we're realizing, hey, our own path is this way. And now we have this authenticity and sort of a comfort in our own skin of where we think we want to lead our company. And that took time to develop.
Yeah.
And I guess I would lastly say, I think, we have the same excitement we had when we first started the company in 2015, but it's just different. Like we've also figured out there's zones of excellence and zones of genius. As physicians, we're pretty competent people. We're pretty smart, well put together, can really work really hard. We've worked hard most of our lives, so we can do a lot of things. But then we're starting to see, hey, this area, man, if I double down on this, things are going to explode, right? And similarly, so I figured out mine, Ravi's figured out his, and now we've allowed our team members to, get into their zones of genius. And that's what really is going to take us to that next level.
Yeah, absolutely. And we've talked about growth and evolution, but that never comes without blood, sweat, tears, scraping your knee up a little bit, as Vic said, being punched in the mouth. So what did you have to sacrifice to make Viking a success?
That's a great question. And sometimes you think you have to sacrifice to be successful, and that's not always true. You can if you really figure out how to manage your time properly. I remember, Vic, you and I used to wake up at like 6:30 in the morning, meet at Starbucks before we have to run out of the hospital, and we'd go through what we needed to do at Viking. So I guess that's a sacrifice of sleep. we would definitely sacrifice sleep in the beginning. But what I felt was, it wasn't necessarily, I didn't feel like there was a loss, right? I didn't feel like there was less than or a loss, or I was suffering in any way when we were building this. It was time consuming. It was, it took additional effort, but I feel like it was like a lot of it was gaining. It wasn't sacrificing anything.
So I would say there's trade-offs. Let's just use that word. So, time with my kids, time with my wife. At the beginning, when you're starting a company, if you're not putting in the energy and time, think about it. A company is like a birth of a child. It's a newborn. You really have to pour into that thing. And yeah, I mean, I was essentially working to get to the point where I worked 0 jobs. I had to eventually work 2 jobs, right, at the beginning. So I worked full time as a cardiologist. And then in my nights and weekends, I was like calling investors. I was, we're working on like PowerPoints or decks, investment decks. We couldn't afford any employees at that point. So we were sort of doing it all ourselves, bootstrapping the whole thing. There are times where, like even recently, we had this deal and, we had some equity fall out last minute. And literally Ravi and I were like running to the bank and saying, all right, the scenes in a casino where they throw their whole hand in. And so we literally had to do that. We had to put like all our capital in, and it was temporary, but still, I mean, we pushed all our money in that we had, in liquid cash, because we had to support the deal, in the short run. And so these are the things that you don't see. They're behind the scenes, and it's what you need to do as the owners of the company. It's if it's to be, it's up to me. The buck stops with us. But with that said, we get the benefits, right? And I'm sure this will be your follow-up question. So I'm going to go ahead and steal your follow-up question, which is, that's why I get to go to climb Mount Kilimanjaro. That's why Ravi's going to tell us his volcano story. That's why we're going to, I'm spending a month in Italy with my family now. And I'm doing all these things because we put the time and energy in, and we've created this powerful rocket ship that is providing employment, is providing I don't know how much wealth we've created for our investors, but it's a tremendous amount. We're creating wealth for the cities where we invest in, and we've obviously the positive impact on both the environment and on charities has been also appreciable. So that energy and sacrifice, you can ask any founder, any startup, any entrepreneur, they've had to put that in, and if they do it the right way, the outcome is so worth it.
Yeah. Just to follow up on that, the way I structured things was, I was very lucky to be in a position where I invested in those units in DC, and I was able to pull back from my clinical duties pretty significantly as we were ramping up Viking. So it was in a way, it was like a transfer from one position to another. So the burden of that time wasn't felt as much, but there definitely were stressors. Now I try to put those out of my mind. But now, Vic, as you were talking, you answered the very-
PTSD, Ravi,
Yes,
PTSD.
that's when you asked me the question, Nathan. I'm like, oh, it was awesome. I don't remember anything bad happening, but now that you remind me, yes, there were absolutely times. I remember one particular time where when we were buying a fractured condo complex, and we actually signed an agreement stating that the seller could literally take our earnest money and pull out at any time for any reason. And that was the only document. That's the only agreement he would sign. And he asked for a certain amount per unit, and we said, "Hey, look, we came to him with all these reasons why this agreement didn't make sense. We weren't going to pay this amount." And then his response was, "I'm going to add $1,000 or $2,000 per unit in addition. Plus, you're going to have to sign this agreement." That was his response. That's how difficult he was to work with. So signing that
Essentially
agreement,
an FU.
yes, exactly. It was basically that. And signing that agreement, I mean, I lost like a lot of sleep.
I lost a lot of hair.
Did the deal work out in the end?
Oh, it was our best deal that we've ever had. I mean, it was
So yeah, at the beginning, sometimes you swing for the fences, and it can sometimes work out, sometimes not. But overall, I think we figured out how to
Yeah.
risk small amounts for large amounts, and it has worked out for us.
Yeah. And ultimately, it's all, hopefully all these trade-offs are leading towards more freedom, right? Hopefully, at least. So Ravi, how have you been able to, free up your time? And now what are you doing with all the time freedom that you do have?
Yeah, I mean, it's really getting the right people in the right seats, like you, Nathan. I mean, you have an amazing understanding and knowledge of multifamily, and you're able to, improve and grow in the company. And as you grow, Vic and I can step back. So we have multiple team members like that. So we're able to pull back and do some of the things that we're interested and passionate about. As I mentioned before, I started this functional medicine practice this year, Peak Health, which I'm really excited about. But then also in my free time, I'm traveling more. My family and I took a trip to the Galapagos. It was several weeks. It was unbelievable. It was amazing. If you haven't gone before, I'd absolutely recommend checking that area out. I also recently took a trip to Guatemala, climbed a mountain. There's this Mount Fuego, which is like a active volcano that I was able to see, camp out there at night. Like in a lot of these trips and taking this time off that I really didn't have before, spending time with the kids, coaching their soccer teams, taking them to various events, going on various types of trips with them and spending time with the family. I mean, it's awesome being able to focus not only on work, but things that you're passionate about and things that are making a difference in the world, like the functional medicine practice I was mentioning, then also charities, and then also your friends and family.
I love that. I love that. And Vic, it's not just time freedom. There's other kinds of freedoms as well. Can you kind of explain what the freedoms are that you've gained through passive investing in real estate in general?
Yeah, like one is just the freedom to do just pretty much whatever you want. So I started another company called Limitless MD, which allows physicians to really gain what we're talking about, freedom, and it allows them to do all this. And so I tapped into something that I was really passionate about, which is coaching and mentoring. And so now I'm helping hundreds and hundreds of doctors all over the country do that. So that's really been cool to see another company come do, because I was able to create a team within Viking that allows me to, able to do other things. And so that's really powerful. Number two was, traveling the world. So having that geographic freedom is really powerful. Like, I think there are some closes where I think I'm in Mexico and Ravi somewhere else. Having the obviously financial freedom is very powerful. And, being able to write, large checks to charities, being able to take care of your kids, in a meaningful way, take, epic vacations with your family, as Ravi was mentioning, but also having this peace of mind, just knowing that, look, like I'm going to be okay. My kids are going to be okay. Their kids probably will be okay. And it's like that peace of mind. You can never, you can't buy that. It's really powerful to have. And then just it's now that you don't have to work, you even work harder because you're really passionate about it. So I still get fired up when there's a new deal. Like we were talking just in the green room, like, hey, Nathan, what's going on with that deal in Texas, or what's going on with that deal, and I'm more excited about it, Ravi and I are starting to fly out to, we've done conferences. We've done the Physician Wealth Summit, which was affiliated with the Best Ever conference in Salt Lake City. We've done an Atlanta investor immersion event. So now we're starting to have more thought leadership. We're starting to educate people more. We're starting to do events, live events. We have this educational series where we're teaching people how to have phenomenal luxury travel, get their kids into the best colleges, biohack. And so it's I think of wealth as a holistic wealth, and there's multiple forms of wealth. And so that's what we're now about. And Viking Capital, you talk about learning and growing and innovating. We really believe in sort of the Ritz-Carlton Four Seasons approach to our investors. We really want to show them that you can work with JP Morgan, Blackstone, any other big company out there, but no one's going to treat you like how you will with Viking, and because even though we're starting to become more of an institutional level company, that the customer service, the quality, the connections, the relationships that we're forging is so powerful. And so like I'm vacationing with some investors now. I'm having, like it's more of a personal bond than a transactional relationship.
Yeah, I love that. So let's say this, hypothetically, you wake up tomorrow and all the freedom Viking is taken away from you. You have to start completely from scratch. What's your process? Kind of walk me through how you'd build back to where you are now. Would you go a different route? Would you go the same route? Walk me through that process.
Go ahead, Ravi.
Yeah, that's a great question. So, it's sort of like, I think about people winning the lottery, and when you win the lottery, you have so much money, you have no idea how to handle it. And most people will spend it, and there's like, I can't remember the statistic, but their happiness decreases and they end up losing all their money very rapidly. And then they're not as fulfilled in life. But when you build something like we have over time, and you understand the detail and nuances of that, and are able to grow as a person because of it, if it's all taken away, it's so much easier just to gain it back. Because as Vic mentioned before, your identity shifts to becoming a person that is a multifamily syndicator, that is able to take down $1 million deals. So I think if everything was taken away, it would be just a process of that we already know, of getting the right people in the right seats. Maybe you wouldn't pay them with cash, but you'd pay them with equity and deals instead of cash, because we wouldn't have any. But you just build that team up, and then start making those connections as we already know how to do. And I think the growth would be quite rapid. There's other. It was Wayne Dyer that said this, and I think it's so true. And that if you took all the money out of in the U.S., for example, took all the money out of everyone's pockets and bank accounts and just spread it at random over the entire country, after 5 years, it would all go back to the way it was prior to that. And you can see it happening. It's so true. And I think that's how it would happen.
I'll give you a more granular answer, Nathan. So I'd keep my family in DC. I'd go do something called locum tenens, which is where you work as a sort of arbitrage. You go to the place that pays you the most money as a physician, and you can work there obviously, remotely. I mean, not remotely, but you'd be working, you'd move to that location temporarily and work. And so I'd get the most amount of money I can in a short amount of time while working as a cardiologist, because that's the worst thing in the world. You can take away all your money, but you can't take away your skills and what and your experiences, right? So, and then I would go and invest in small multifamily, 20 to 50 units. And I'd get a couple of those, probably 1031 those up. And then once I'm ready, I'd go ahead and probably come and recreate a small multifamily team. Probably I'd base out of Atlanta, because that's the market I know the best, and start buying 60, 80, 100 units. I'd do that for about 10 properties, and then move on to the 200 and 300 units. And I would get high net worth individuals, and I'd grow a syndication platform very quickly. And I think within 5 years, I could probably equal to, what we have now. And I think that's how quickly you can do it. And so you are leveraging my cardiology income and your network and contacts, and the knowing geography that you know well and market that you know well, with a certain asset class, and then doubling down. And between the use of 1031s, rapid acquisition of capital, finding deals that make sense, and then, rapidly scaling it. And then all the mistakes we've learned, we don't need to make them again.
Right. Right. That's amazing. Well, Vic, Ravi, I really appreciate your time, the effort, your insights. I'm glad we really took a deep dive. Is there any kind of final departing words of wisdom that you'd like to give to investors that, may be starting out or kind of halfway through their journey?
Great question, Nathan. And I knew you're going to have something tricky up your sleeve. And so I came prepared. So I'm about to do a YouTube video on this book because I think it's one of the most powerful books out there. It's the book I've gifted the most to most friends and family, and it's called The Almanac of Naval Ravikant. And I think I want all investors to read it because it's so powerful. This guy is a Silicon Valley investor. He's a venture capitalist, but he's also a really unique thinker. And whatever he says, it's so powerful. It's like one or two sentences, almost like a tweet, but it's like a truth bomb. And so it's remarkable because he combines happiness with wealth and wealth accumulation. And so it's a nice way to think about becoming a spiritual millionaire. And that's sort of the buzzword I've been thinking about recently, the word spiritual millionaire. And so I think some of the most powerful pieces of advice are there's 4 types of leverage, and that's capital, people, code, and media. And so if you can learn to use these things, you can literally create any kind of wealth you want. And leverage really the force multiplier on your judgment. So having really good judgment, accumulating high utilitarian skills, and then putting that toward some major transformative purpose, you can really accomplish anything you want. So, we've done good job capital and then people, but now the next level is code and media. So if you don't know how to code, then use artificial intelligence. And then media is eyeballs. And so what we realize in Viking Capital is marketing is really important. Thought leadership is really important. And that's how we've created our investor base. And that's how we're able to translate that into more and more success.
Awesome. Ravi?
Yes. So Tony Robbins has an excellent quote, which is the strongest force in human existence is the power of your identity and to be consistent with your identity. And that is something that was very powerful for me in that I shifted my identity as a physician to an investor, to a sponsor, to an operator, to one that offers people an opportunity to invest. And I would say if you're interested in going down this path, you really have to make sure that you can identify yourself as that person. Because if you can't think of yourself as an investor and you just think of yourself as someone that wants to make money, it's just not gonna it's not gonna manifest the way it would if you completely identified as an investor. And to your last question about losing all your money, losing everything, the strength of taking over from where you were, what Vic said, what I said, was because we have that identity already in place. Those are my final words of wisdom to our listeners out there.
Absolutely. Well, thanks again, Vic and Ravi. I'm sure this won't be the last time we all get together, but I appreciate your time.
Thanks, Nathan. Great job, man.
If you like this podcast, please hit subscribe or a thumbs up, and we'll see you next time.